I'm a little underdressed today because being in the UK, we're smack in the middle of a goddamn heatwave! As world events continue to push rally in the defence industry, I recently carried out a full deep dive. So if you want the full breakdown, check out the link below for a video packed full of information. However, at over 25 minutes long, it might be a bit too intense for some viewers, so this is one of 3 videos I'll be uploading to cover my top 3 companies, and in this one I'll be covering Lockheed Martin. Here we go. The defence industry can be quite incestuous, with various military products being collaborations between separate companies, so I'm going to break down the industry by focusing on the areas they are operating in. If you've been watching any coverage on the war, then you would have noticed how Russia's strategy was initially based on a practical invasion with their tank fleet, with an expectation that they could win within a matter of weeks. Putin failed to account for mass corruption in military leadership and unmotivated and poorly trained military personnel, outdated, poorly designed military equipment and supplies, and pitted this against a country highly motivated to fight back and the Western world more than willing to support them through military supplies, with over $3.4 billion worth of weapons sent by the USA so far. And the threat imposed by a determined Cold War tyrant, that is Putin, has caused many countries to realise how far behind they have fallen with their military forces, and they need to seriously boost their defence spending. With global military spending reaching a record $2 trillion in 2021, 20% of this figure comes from Europe, where countries have been bolstering their defences in response to the Russian annexing of Crimea. 14% was spent by China with their escalating military presence across Asia, and in 2020 Australia responded to what they called a poorer, more dangerous world and rise of China by pledging $270 billion to be spent over a 10-year period, and they have been particularly focused on their long-range missile defence systems. The USA remains the biggest contributor with $801 million spent on defence in 2021, and in March alone the country attributed a $13.6 billion aid package for Ukraine. So with budgets on the rise, I've done the research, I've gone over the fundamentals of the top defence companies. To understand this, here's a breakdown of how these companies are playing a role in current world events. On July the 1st, the Pentagon agreed an $820 million military aid package for Ukraine. And this is where we can be very specific, because if you've seen the many videos of Ukrainian soldiers blowing up tanks, you've most likely seen the Javelin anti-tank missile system, a joint production between Lockheed Martin and Raytheon Technologies, 2 of the world's largest defence contractors. To date, 5,000 of these weapon systems have been supplied, representing 1/3 of the USA stockpiles. Lockheed CEO Jim Taylor told CBS News in May that they are aiming to nearly double their annual production from 2,100 to 4,000 units. This may take a couple of years to develop due to production and material shortages, particularly when it comes to semiconductors, as each missile needs a shocking 209 of them. However, it's because of how vital a role semiconductors play in defence products that the US Congress are having to rethink their reliance on foreign chip manufacture. They are currently trying to pass the Bipartisan Innovation Act to invest in domestic design and manufacturing of their own chips and reduce foreign reliance. In June, UK Defence Secretary Ben Wallace announced Ukraine would be supplied with an unspecified number of M270 multiple launch rocket systems. Developed by Lockheed Martin, they can fire 12 surface-to-air missiles in a minute with pinpoint accuracy from a range of 80 kilometers. Ukraine started using their new long-range systems in July, and these have had a devastating effect on Russia's forces. Fuck those guys. Another area of interest is the Asia-Pacific region, namely Australia, who have been expanding militarily in response to increasing hostilities with China, and they have been particularly focused on their long-range missile defence systems. One such weapon is Lockheed Martin's AGM-158C long-range anti-ship missile, and the company secured a $800 million order from Australia to bolster their naval defences as part of their 2020 Defence Strategy update. The missile has a range of over 370 kilometers, making it a significant upgrade from Australia's current AGM-84 air-launched Harpoon anti-ship missile, which only has a third of the range, having been introduced back in the 80s. Also, one of Australia's most significant military providers is BAE Systems, a UK-based global manufacturer and supplier in air, maritime, land and cyber defences, who have been supporting Australia since 1953, including Lockheed Martin's F-35 fighter aircraft series, which is built in partnership with BAE and Northrop Grumman, both of whom have secured contracts to support Australia's Joint Strike Fighter Maintenance Hub in Williamtown, where they will provide maintenance, repair, overhaul and upgrades across the Asia Pacific for military aircraft, with the F-35 design and production work alone being valued at around 1.38 billion Australian dollars. Lockheed does have a long history of operations, but one that has seen many legal scandals across generations, with 81 in the last 21 years alone, including overbilling defence departments, revealing classified information, bribing government officials, project cost overruns, improper disposal of hazardous waste, and many more. But the company has powered through these cases simply because this type of activity has become common practice in the industry, and Lockheed have become indispensable to the US government in defence and civil services. The company spends millions annually lobbying, influencing government decisions, and when it comes to allegations of illegal activity, they have a history of paying millions to settle. Lockheed has become so powerful and influential, it's too big to fail. There is much more about the industries that could be talked about, but time is a factor. So as usual, this is where I'm going to try and go over all the financials to explain which companies are offering the best opportunities for investors. Having gone over a massive amount of data, I'll be breaking this down by focusing on the few companies that I think offer the best value. With the losers out, we have better choices, and one thing to point out straight away is that the dip here is a result of the merger of Raytheon Company and United Technologies to form Raytheon Technologies. The remaining companies have some pretty decent profit margins, with BAE, Lockheed Martin, Northrop Grumman and HEICO in particular having the highest with an impressive 16.54%, but they are a tiny company by comparison, with a market cap of just over $16 billion, trading at over 56 times earnings. So when comparing the fundamentals to the group, they are way off the chart in terms of value and too expensive for my taste. With the choices left, I don't like to buy companies trading over 15 times earnings, especially with companies with a PEG ratio over 1. But all these companies are seeing momentum brought on by recent world events, so the question is, which companies are trading at fundamentals that represent the increased value and growth of the company, not market sentiment? Looking at their earnings, Lockheed Martin have been performing exceptionally well over the years, hitting over $67 billion last year, and compared to the others, are on a consistent growth pattern for the last 8 years, aside from 2017 where the company's profit margin fell to 11.7% and a net income fell by 61%. This is largely due to a fall in operating profitability from the company's space division, which fell from 18.7% to just 9.7%. The stock saw a moderate drop of 6.8% in March when Bloomberg reported the US government would be buying 33 fewer of their F-35 jets in 2023, compared to 142 units last year, which was 3 more than planned. It seems investors were quick to overreact as the drop is small in comparison to the overall business. Lockheed are still planning on delivering 151 to 153 jets in 2022, and even with the US reducing that order, Switzerland and Finland will be buying jets for their new fighter programs, with Finland in particular planning an order of 64 jets in a $9.4 billion deal. On July the 19th, Lockheed Martin announced they were close to closing a deal with the Pentagon to provide 375 F-35 jets over the next 3 years. And the deal includes providing modernised hardware for improved weapon carriage, target recognition and more advanced Block 4 electronic warfare capabilities. With their previous deal pricing the F-35A just short of $80 million, the B at $101.3 million and the C at $94.4 million, the latest deal is estimated to be worth around $30 billion. But as with many industries, Lockheed stock will fall in line with any market crash, but at times of warfare, such as 2001 into 2002, and with world events as they are now, the stock seems to rally and come back stronger. Despite these setbacks, Lockheed Martin has powered through, growing their revenue consistently, and net income has been returning to market-leading levels. The company has been growing in assets and shareholder equity has been climbing at a rapid rate, whilst Lockheed have been using funds to pay down debt and buy back stock at a decent pace, bringing more value to shareholders. The company fundamentals show the stock trading just below 18 times earnings, and although this means it's on the more expensive side, This is a company that has provided more or less consistent growth over decades. Compare this to earnings, and despite the drop in earnings in 2017 to 18, price to earnings has grown at an acceptable pace. Compare this to Tesla, for example, which is a prime example of how massive jumps in price to earning ratios often result in a correction. The company is expected to follow a compound annual growth rate of around 1.44 to 5.94% over the next 5 years, and the consensus from analysts leaves the current $419 a share with a growth margin of around 15%, which may not blow anything out of the water, but this is a company that continues to grow over the long term. It has strong operations and continues to secure high revenue contracts from key governments. And when it comes to dividends, the company has been increasing this amount on an annual basis, and with such consistent growth, it's almost pornographic. And whilst I'm looking at the stock trading at $419, that's a yield of 2.67%, which is great news to investors who love a dividend. Warfare is a complicated and incestuous industry, and it's taken a lot of time to put all this information together. Now, there are other companies I haven't covered in detail, Raytheon, L3Harris, etc., that have their own roles in the industry, but I focused on the companies that show the patterns of growth that I look for in investments. I've identified 3 companies that are showing strong positions in the market, good organic growth in their earnings, and stock prices based on their productions and contracts, not market sentiment. Comparing these 3 to the S&P 500, they are not immune from market crashes, but as the defense industries recover over a general bull run, they have had a much faster recovery than the competition, and Lockheed has been gradually catching up with the S&P 500 and could shortly overtake it. If you want a full breakdown of all 3, then check out my full deep dive of the industry in the link below. If I had to summarize these 3 companies, I would say Lockheed Martin is the reliable, sustainable, long-term play of the group, and I'll be on the lookout for any buying opportunities. As part of routine rotations in my portfolio, I have moved out of my BAE positions as I felt the stock has climbed a little too far too soon, and I may consider taking on BAE again if it comes back down, the dividend improves, or the others become too expensive to continue investing in. For now, it's back on my watch list, and I'm building my positions with the other 2 a bite at a time to balance out the current volatility in the market. Overall, I think these companies will stand the test of time, responding to the growing world hostilities and returning profits to shareholders over the long term, and that's pretty good for investing. So that's my take, and if you like what you see and you want to see more, please smash that like button and subscribe so you don't miss out on future videos. And if you have any thoughts, please comment below, let me know, and I will take some time to respond. Until next time.